What's up, Outliers? Happy Wednesday. Today, we're going to take a look at the market, see what looks exciting to us. There's a couple questions that I got over the last few days that we will talk about. So we have a busy agenda. What's up, Lauren? Great to see you. Quick admin note, I already posted in the chat. If you have time, please take a look at that link. I'm essentially just asking to understand what you're working on. That's what that post is. It's free to everybody. And you guys are welcome to shoot me an email directly. You guys are welcome to comment on the post, whatever your preference is. But what I'm trying to do is build into my road mapping content that is geared towards what you're working on. The goal there, obviously, is to make it more relevant so that it helps where needed, because people are in all sorts of different spots, which I fully acknowledge and recognize. So this is a way for me to try and figure out who's where and help as much as I can. You can access that in the Patreon post, which is free for everybody. It's open to everyone. All right. Couple quick updates. Market as a whole is very grindy right now. We just cracked a new high. And if you look at our average true ranges for the last, relatively recent period, 5-day, 20-day, we're talking like inside 1%. So it's really, really narrow. And you can also see that reflected in the total ranges. That's why actually in this ThinkScript, which I do think is in the ThinkScript packet for you guys. But the reason why I set this one up is it tells me what the percent return is close to close, but then it also gives me what the total range is, right? Plus and minus. And the 5-day range is 1.6%. And if you go out further to like 3 months, it's 7.2%. So we're obviously in a really compressed time frame, and that corresponds with volatility being as low as it is. It did pop a little bit recently, which has actually been a welcomed change, but it's still below the mean, kind of like, minus 0.2 standard deviation. So it's like pretty close, but overall volatility is super, super low here. My portfolio is generally utilized. We'll go over a little bit more of this in detail tomorrow and Sunday, but at a high level, I am 84% utilized. Speculative trades are light right now. I am heavily in core, and then also rotating through earnings just because we are in an earnings season, which has been, I would call it mixed. I haven't looked at total performance yet since the season started, last week, this week, but it's nothing impressive just yet. It's very grindy. It's definitely positive, but I don't think it's significantly positive. Let's start with the latest from Big Daddy J-Pow. We had the Fed came out, talked about effectively nothing, and boils down to right now we're in a holding pattern. This has already updated. This obviously was showing a little bit. Previously, it was showing the release for today, which is like 90% plus. But the main thing I notice here is the Fed is keeping their cadence, even though Trump is really wanting them to start cutting rates faster. And I actually think that the cadence that they're on is generally fine. They're looking at 2 more total cuts is what it boils down to. So we're looking at the first probability of a cut on 17 June, that meeting somewhere in there. And then the next probability of a cut falls in the fall in like October timeframe, somewhere around there. We're at the low end of where we're at here. So the impact that I think you're going to get in small caps is starting to limit out. And I think small caps are starting to front run a lot of this. And I talked about this earlier on the live stream that I did for Irvin, but it's still a really pertinent point, which is S&P year to date is up 1.42%. IWM is up 6.33%. That is small caps doing quite literally what I was discussing before, which was catching up, because small caps had been so suppressed for so long based on the rate environment, because they can't logically exceed and really start expanding from there. But if I zoom these out to like a 3-year time frame to give you context, you'll see exactly what I'm talking about. And I think I did 3-month here by accident. I did. There you go. You can see this near-term velocity from small caps. Small caps over the last several months are now cracking above the 1 standard deviation line, whereas large caps S&P and then large cap tech heavy Qs is like just above the mean. This tells you the velocity here. A lot of this is pricing in the near-term expectation of the rate change environment and kind of a more permissive environment in general. Across the sectors, there are a couple interesting trends. One of them was healthcare that started to collapse a little bit. And this was like a mixed bag. I actually thought the performance in healthcare was notable because this had been a pocket of strength for a while. And then the leaders and laggards started to oscillate in there. So I'll show you what I mean by that. If we go into healthcare and we plot this over like the last 5 days, you can see where the leaders over the last 5 days exist. And a lot of them have exhibited really strong long-term momentum. So again, a lot of these names are the same names that you see on longer-term timeframes. This is why I talk about, especially with momentum style trading, stacking strength. Because Gilead, even though XLV itself had a bumpy day, Gilead did not care. And Gilead is still continuing to cruise north. Conversely, weakness is extending in a handful of names. And the long-term momentum has flipped negative for some of them, specifically Hum, but then United Healthcare is also getting smashed. It's 51% off of 52-week highs. So if you take a look at Hum has been getting absolutely killed. And same thing with United Healthcare. United Healthcare had a really lackluster earnings, super lackluster. They came in at 211 compared to 209. I don't know exactly what the guidance was, which clearly is a bigger part of the equation there. But looking at them for earnings, I'm just trying to see if they made the list, and they didn't. We skipped over them. Yeah, I don't see them. They did not make the earnings list for this week, and they ended up moving 4%. I don't know what their expected move was. Let's take a quick peep and see how that went. Let's go to UNH. Their expected was 5.8, and they came in at negative 19.6. Yeah, duh, because that's talking about the move today. So it's like almost a 4-time expected move, which is huge. That's an easy one to get smashed on. How far in back can we go into on demand? Can we go back to the 26th? Because I actually want to see if we can see the pricing. Take a quick look. Oh, we can. Great. So we'll go to 26 Jan. And let's take a look at the pricing of the at the money. And then we can just come out of on demand and see what it's trading for now. It won't be, exact, but it'll be pretty close. All right. Oh, that's cool. They updated that. All right, let's see. So the straddle was like the 352 and a halves, which are actually a little bit illiquid. 20 wide. So I would have gone for the 350s. Oh shit. So we're at 2160. 2160 is what these would have sold for. Let's see what the 350 straddle in 30 June is now. Or 30 Jan, sorry. The 350 was at 2160 and now it's at like 55. So realistically bad, but not that bad. That's again, this is the cool part about trading volatility. If you think of what the expected move there was, the expected move there was huge, but this also does take into consideration that it rallied today. So if somebody had exited closer to the close yesterday, it would have been brutal, but also if they would have closed a little earlier in the day, it would have been less brutal depending on, what vol they got out at. The main note is that this thing came in almost 4 times the expected move and absolutely would have hurt, but not a kill shot, which is awesome. That's the cool part about trading in earnings cycle, which that actually gives me an idea. It could be cool. Maybe tomorrow on the skill development segment, what we could do is literally go back and trade the earnings that have released so far, like, within the window, just to assess the analysis that we do on like Sundays. And then to see what the realized performance is, at least in the aggregate with with a simpler assessment tool. That could be fun. I'll add that to our agenda because I think that would be a useful exercise, folks, to kind of like see the analysis side and then the application and then the conclusion of it. So let's add that. So paper trading earnings. Perfect. All right. Next on our agenda is actually talking a little bit more about earnings. So there's 2 things I want to show you guys. The first one is this. And again, I'll go a little deeper into detail tomorrow just because this starts to get a little closer to like specific trade building and stuff. But I do want to show you the trend that I'm seeing so far. In terms of beats, there's a lot of things that are having pretty strong earnings and pretty good post-earnings announcement drift. STX is actually a fantastic example. They reported 311 versus 262. I actually had a day trade on in there. So it still, to me, looks good and viable for post-earnings announcement drift. But there's really good drift that's underway right now. Interestingly enough, there's also stuff that's exhibiting really poor movement like CVLT, even though they beat. And this has everything to do with poor guidance, right? They came in at $1.17. They were estimated at 40 cents. So almost tripled it. But forward guidance was soft, and stuff like this starts to look interesting for like longer term downside plays as that drift seems more likely than not to continue. But I also haven't looked at the deltas yet to see what the floor is pretty low. Not that low, but pretty low. Like if we take a look at the shape of the out of the money deltas, I can show you what I'm seeing right now. This. And we don't need that many strikes. We could do like 25 strikes. So you can see the at the money right now is like the 90s, which is right here. And then the first few strikes out of the money, the 87.5s. And then the delta starts to kind of comparatively to this side, the slope here is much more even compared to the slope here. The slope on the put side is a little bit more aggressive, but it terminates a little bit lighter. So the market is pricing in a floor, but it has a little bit of room to move before it hits what seems to be what the market is pricing in as a floor. You effectively need to get out to like the 70s. So it's not like some huge trade, but as usual, stuff like this can make a little bit. I'm just trying to see where the next volume node is, which is like the 76 handle. So we'll track this. And then let's zoom in a little bit. Let's do like a 3-year. Yeah, okay. So it's clearly hanging in this volume node right now. And then we'll see if it starts to break below that volume node. Yeah. Volume spiked up pretty good. And then we could take a quick look at the options market. CVLT it is. CVLT. Decent long call premium on the day. So it's definitely not like perma bear positioning. The other interesting thing is coming into their earnings call premiums were also pretty bullish, which is a little strange to see in something like this. Let's see the overall tilt. Yeah, I mean, it's pretty bullish in the front right now. 20 Feb. Let's see. Where we at? Where we at? Where we at? Wonder, that would be another cool thing to add to this. I got to reach out to these guys with another idea. Cool. Let's see. This is definitely some volume over OI here. And most of it is at, yeah, most of this is getting bought. $0.50. I mean, that's a decent, that's not like a, not a huge trade, but that's also not a small trade. That's a little bit longer than I would have expected. This kind of thing, it just leads me to not be as bearish. Doesn't mean not bearish at all, but definitely not as bearish. And let's see what some sort of, what is this? A $5 wide spread at the 50 delta. This is a 40 delta. What does this get you? $1.07. So a bit cheap, especially for like a 40 delta. For those that like to trade verticals and stuff like that, wouldn't be super high on my list. All right, we have plenty of scanning to do tomorrow and whatnot. I want to talk to you about 2 reports. I have not looked through these yet. These are from, I think I put Goldman Sachs because I'm an idiot, and these are Morgan Stanley. Morgan Stanley. So it looks like a bunch of you are going to have to leave the live stream because obviously you guys clicked in because you were expecting Goldman Sachs reports versus Morgan Stanley. That's my bad. That's false advertising big time. But let's take a quick look through here. This, again, everybody, you all can sign up for these. So this isn't like proprietary information. It's completely free. And it's just cool information to keep in mind. For those that don't know, a really slick thing that I like to do is I download all of these. I actually have a script that goes through my inbox and it takes all the different reports and all that kind of shit. And it downloads it and it puts it in a specific Google Drive folder. Then what I do is I can use Gemini to query that folder. And I can ask it essentially like, hey, tell me what's happening with this, that, and the other thing. It's essentially building my own version of ChatGPT, but on a more curated source of data, which is kind of useful. So if you didn't know that that's a thing, it is. It's super easy to do and definitely kind of nice, especially with a lot of the emails. I have another task that runs that auto summarizes all of them for me because there are quite a few. Okie doke. Let's see what they say. Boom in AI infrastructure, financial sponsor activity, and cross-border deals have set the stage for another active M&A year. Appetite for scale in AI, are driving corporate M&A across sectors as companies pursue capabilities in infrastructure, hardware, and software to meet surging compute demand. This is actually really, really cool, BT dubs. The fact that M&A is starting to take a different shape, with a lot of companies starting to consume companies that might not be otherwise directly in their sphere, which, again, that kind of stuff is interesting to me. And it's because it starts to change the landscape. You can I already gave you guys this example, but we watched a thing a while ago about farmers who are using all sorts of AI to influence how they're driving their autonomous tractors and identifying parts of their fields. But the point that I'm making is, like, the farming industry is not necessarily what most people would immediately think of when we think of like cutting edge tech application. But even the farming industry is starting to have to branch out into this sphere, which is pretty much the case for just about everything. That has a really big impact on the ability for smaller companies to position themselves to get scooped up. And I imagine it'll be pretty active, especially with being in the more transformative period of AI. Sponsors face urgent need to sell assets and deploy elevated dry powder. Corporates are also using breakups to sharpen focus and unlock value. I'm actually really curious about the breakups. I want to see what's going on there, because I have not caught a lot of news on that. Cross-border M&A demand continues. Aggressive buyers growing activity in Japan. All right, I'm actually really interested in the breakups. I want to see what this is. Oh shit. So 2025 M&A volumes up 40%. That's actually pretty impressive. 5 forces beginning to shape the next phase of activity. Corporates across sectors turning to M&A for scale and capitalizing AI infrastructure. Yep. Financial sponsors pressure to monetize long-held assets while sitting on elevated dry powder. Fucking GameStop. Use your money, guys. Creating urgency to sell and capacity to buy. Cross-border buyers are entering with heightened appetite. Okay, we already read this shit. We already saw all this. Let me see. Yep. Sponsor portfolio. I don't care. Here we go. This is what I want to see. Separation. Strategic focus fuels breakups. Whoa. Look at that. 2025 had a record volume of separations, which will remain a meaningful driver of M&As as big companies streamline their portfolios. 2026 is expected to have 50% greater volume than last year in decades. Wow. While the number of breakups each year is relatively small, and that's typically the broader trend that I expect to see, the deals tend to be high profile and reshape competitive dynamics. That's super interesting. CEOs and boards recognizing upside, turning diversified businesses into more focused entities. And again, you could see this in Meta. Meta is a prime example of this. Meta literally rebranded to completely focus on the metaverse. And yet, as of late, you're not really getting a ton of metaverse messaging from them, where you're going to be in a virtual meeting but still have these fucking goggles on and sit in a meeting in person. That kind of defeats some of that purpose, I suppose. But they're pivoting way more into the AI infrastructure side of stuff, and they just went through a pretty big round of layoffs for their meta or the metaverse oriented business arms. So yeah, this not a prime example of this, right? Because they didn't like sell off the meta business, but it definitely shows you that they're scaling that down. Okay. Overall, what I take away from this is M&A looks to be aggressive, growing, focused on AI. That leads to a couple interesting tradable ideas. One of them is actually starting to keep a closer eye on some small cap AI companies with proven infrastructure and postulating what kind of deal flow they might experience, which is exactly what I'm going to ask ChatGPT now. So I'm going to ask it, let me give it a new chat. All right, so I'm going to say analyze US AI focused small cap stocks that might be a target for M&A include the ticker of the small cap company, an overview of their financials and product, then map them to potential buyers, including value and pace. See what GPT comes back with. That one's probably going to take it a minute. It's a little bit of a deeper question. Let me see what you guys got going on. Zuber says, are you trading silver or gold? I don't think anyone has seen anything like it. I'm tempted to trade vol. Yeah, we actually talked a little bit about this, but I have been trading, but directionally, because I originally started trading the volatility in silver a couple months ago. And I started to get ran over because of how aggressive the move was. And I, at that time, definitely thought that we were already getting to a point where I thought it was a bit extended. And so I was trading in SLV specifically. I was just trading volatility. But then as the short strikes started to get challenged, I said to myself, well, if you can't beat them, join them. And everything else in the metals right now reminds me of like really strong momentum, like exceedingly strong momentum. The fact that this thing continues to grind higher is absolutely mind-boggling to me. But that's the really neat part and intersection of being a trader, because a lot of times we'll trade things that we don't necessarily fully have a completely fleshed out picture of what this is, why it exists, how it behaves. And we kind of take it at face value for what it is. And that's exactly what happened in SLV. I started trading the volatility in it. And then as soon as I got ran over there, I immediately started just trading the metal itself. Gold, otherwise, I'm not in it anymore. And it's more just because the near-term velocity in silver is astounding compared to gold. And both, by the way, are incredible. But silver has just been way more aggressive. So yeah, actually a really, really interesting market right now with the metals. I think that this is literally going to become a case study, because the coolest thing about markets doing stuff like this, especially with hyper established commodities that have been around forever. Everybody knows about silver, gold. We all know the entire value chains. We know the business opportunity. We know the use cases. We know all of it. Yet we see this happening. And that's the cool part about markets. And that's the tricky part when you model markets, because I don't think anybody had in their fucking playbooks for the precious metals to start moving like this in this velocity. I don't think that was something people generally were expecting. Yet it's here and it's happening. So that's the fun part about markets, is that they're so damn dynamic. And you might have an idea of like what works, what doesn't work, and what models well and what doesn't model well. And then the markets can literally just completely flip and then do whatever the fuck they want. It's incredible. Now, the interesting thing in silver at this point is that the volatility picture has changed massively. And I'll show you what I mean. If we look at first the compression, take a look at this. The implied volatility compression at this level is insane. Like everything is at effectively 100% redlined, and it's been up at these levels for a while. So what that tells you is that not only is price going up, but as price continues to trickle up like this, volatility is expanding. Now, the issue with stuff like this is even trying to play the skew is really difficult because of the delta and gamma effect that's going on. You can't really neutralize a lot of it. So there's been a handful of trades that have come across scanners for me that are like these really fat, attractive trades with a lot of risk premium. But as I look at them, I literally think to myself, even though if I were to rank the risk premiums that are being priced into this as a percentile, and the risk premiums are, astronomical, I still don't think it's enough. And multiple occasions so far in the paper trading variants, it hasn't been enough. So the volatility picture in here is even one of the more even like absolutely astounding happenstances with volatility implied versus realized and risk premiums in here. It's just incredible. The moves in here, again, I think that they're going to be fucking case studies of how you think you know something until you don't and until it completely flips. So really long tirade, Zuber, but yeah, super, super interesting. And most of my stuff in the metals at this point is in silver and via the commodities trading futures and stuff like that. But just, yeah, absolutely incredible. All right, so we got our query back from ChatGPT, and it's flagging that all of this stuff is speculation, which is one of the things that I told it I want it to do versus giving me information. So one of them is Very, and Very is an AI workflow company. They're about 0.35 billion as of 2026. And they sell IDEMS in AI-powered digital evidence management for public safety, judicial workflows. I mean, that's kind of interesting, but I don't actually really care. It probably has a decent market cap and stuff, but I don't really care that much. Next one is Rekor Systems, REKR. And this one is, they sell Rekor Discover, which is an AI traffic vehicle analytics using streams, edge processing. That's actually pretty cool. So they're small scale. They have recurring contract driven go to market. And yeah, they would be viewed as like a capability acquisition, which I agree with that. Transportation agencies are slow buyers. A larger parent can accelerate adoption via distribution, and also the use cases for stuff like this probably lean that way. I'm actually just really, really curious what the options market looks like in here. REKR. Different than expected. Quite different than expected. And also looks like somebody front ran this down move pretty well. But definitely different than expected. Whoa. Quite bullish here, but again, we are in like the most illiquid stuff on earth. So the total information that you can take from these kinds of things it's very small. You cannot read that far into what you see here. And then it's a little bit short as you go further out in time. Let's see. I'm gonna see if I can find a more. Oh, this one looks cool. Black Sky. Oh, dyslexia got me pretty bad there. They're about $1 billion, and their platform, the main thing they sell is called Spectra, which is a platform that does tasking, imagery, AI-driven analytics, including like object detection, change tracking. I wonder how stuff like this would compete though against like Palantir and what Palantir is doing. I'm not overly convinced that, I mean, there could be like hostile acquisitions. That's a big thing that Meta and at the time Facebook would do, is they would literally just buy companies that were marginal competitors just to get them out of the way, just so that they don't exist anymore. So the primary buyers would likely be, you know, the larger defense contractors, so Lockheed, Northrop, Raytheon, stuff like that, where they could integrate ISR, AI. And the thing to keep in mind is right now what's going on is a insane amount of shopping. That's no doubt. And I can see that even with like the consulting that I do and stuff like that, it is that is a huge part of what's going on right now, and likely going to continue to be the case. Everybody is shopping and trying to find capabilities. The trick here is that there's a lot of vaporware, And that's why for the query here, I used specifically small caps, because small caps are still, you know, hundreds of millions of dollars. So they're established. They exist. You know, obviously doesn't sound like much compared to things that are in the fucking $1 trillion, but they're still established companies more often than not. And let's take a look. I want to take a look at their options. They also look to be holding up a little bit better. Kind of flat. Whoever this was, they're on the wrong side of the equation here. Pretty bad. Yeah, pretty flat in the near term. What is this? Decent bullish in 20 Feb, but it actually doesn't look like that much. Go to 20 Feb here. At 158, and where's it at? Is that the 30s? 117K at the 30s in 20 Feb. And it's a mixed bag. A lot of bought and sold. Yeah, kind of a mixed bag. Interesting. There's a bunch of, oh, iNod. Okay, I was literally just about to move on, but this one I definitely want to look at. So iNod, I've come across this quite a bit because they pop up pretty regularly in a lot of different kind of trades that I do. So I'm actually kind of excited to take a peep at this one. So they sell data solutions for Gen AI, so collection creation, SFT, optimization, so just, you know, enablers effectively. And it's a provider to AI labs and valuable if they want to secure capacity, specialized workflow. Yeah, it's kind of interesting. The use cases that this is flagging is stuff like Accenture, EPAM, Globin, Cognizant. But this is like a $2 billion company. iNod. And we are going to pivot and take a look at this other report in a second. So if there's any other questions or anything else that you guys want to hit, now's a perfect time to start throwing those in. Pretty short. Oh, wow. Very short there. I wonder if those are calls though. So what is that? 1527, 1527. Let's take a peek. And let's find, oh wait, I'm the wrong one. So it's here at the 50s. Let's see. The 50s, slightly in the money. Yeah, as expected. So those look like either a synthetic position or they look like covered. Yeah. Interesting. All right, let's take a look at this real quick. This one says 4 key investment themes for 2026. Let's see what they are. AI tech diffusion. I feel like that one makes sense. Future of energy, multipolar world and societal shifts. All right, well, let's see what these are. Top performing thematic category in 25. The 3 top performing thematic fell within multipolar world theme. How geopolitical industrial shifts directly influencing markets. Policymakers are keen to promote their visions. Okay. Critical minerals, defense spending, tech localization, AI diffusion. I think we already know that. And then future of energy. AI infrastructure, data centers driving rapid surge, which we know. Alternative energy sources and new technology being developed to provide low cost power supply. Yeah. And I was going to say, I still longer term am pretty bullish on nuclear power. And it's just because as all of this stuff continues to scale and grow, I just don't see how we power it without nuclear power. At least without having massive draws on other resources. So to keep costs under control, I don't see another route here. AI on the labor market. Right? This makes complete sense. AI could affect 90% of occupations. I almost feel like that's a given. 920 billion from full AI adoption. Think of that expansion. And then when people are asking about like growth and growth expectations, this is a big part of it. This is a big part of it. S&P could increase by 16 trillion in the long term in market cap. Insane. Because like we discussed earlier, there's not even like a realistic reskilling that can be done here. This is going to be, you're going to have to completely, I'm sorry. Reskilling is the only way out of this. You can't even do like adjacent skilling. You have to completely reskill. And that's going to be the case for a lot of jobs as they get phased out. They're already doing it with like call centers and shit like that. And AI, it's starting to sound pretty convincing. That's a really simple example. So yeah. Reese says earnings play Friday AM. How might that differ if the earnings release was Tuesday, for example? Seems like Delta might matter more. Friday AM really doesn't differ that much. The Friday PM entries are quite different. But yeah, that's the kind of thing that you can measure pretty easily based on the names that tend to report on Fridays. But if you were to isolate the volatility out, like I wouldn't even bother looking at that way, because the company itself, like that's all that matters. It doesn't necessarily matter what day they report on. So I wouldn't actually even bother wasting that much time like trying to postulate how much it would differ from a Tuesday versus a Friday report. I would just focus on the volatility of the underlying itself, because at the end of the day, that's what's being traded. Tom says employment will be tough, won't even be able to flip burgers. Yeah, and that's the thing, is that there's going to be a lot of jobs that are going to become really high demand because of this, because the trades aren't going away. AI isn't fixing a fucking water heater. So I feel like those kinds of jobs are going to increase in total value and necessity. And then a lot of the bullshit, junior/senior junior engineers that can be phased out and replaced by, a couple people using AI, that's all going to make a massive impact. So we are literally at the turn of a time, and it is so cool to watch this whole thing unfold, because this is incredible. And I have to be honest, being a millennial is really cool, because I existed before the internet, not for long, but still a little bit. I remember life pre-internet. So I got to see the first revolution of AI adoption. And now there's this massive next phase, which is internet, now AI. Super cool. We will exactly have no idea how this is all going to unfold, but from a trader's lens, as usual, doesn't really matter. There's an insane amount of opportunity, just like we spent a little bit of time at the beginning of the stream taking a peek at. So that's all I got. Be an outlier. See you guys later.